The Fed signals that the commodity trend may be moving higher. In the latest FOMC meeting, the Fed lowered by a 25 basis point, contrary to expectation of many analysts who anticipated more cuts in 2025. They signal only 2 rate cuts next year. And this reflects a greater caution about the pace of further reduction in borrowing costs. So how is this being interpreted as an indication that the commodity trend may be moving higher? I'm Con Hao. My work in this channel is to study behavioral science and finance, discover correlation between different markets, and uncover potential opportunities. And before we get into today's subject, please do take some time to read into the disclaimer. And this is the Goldman Sachs Commodity Index. It is a benchmark that represents investment performance in the commodity markets. It closely mirrors the movement of the US CPI. And if you still remember, in June 2022, the inflation hit a high of 9%. And what we're seeing here is that over the past decades, the commodity or the CPI numbers has been moving down very nicely, but something have changed during the COVID. It has broke above its downtrend line. And my concern is this, that could it be an uptrend in the making? And what we are seeing here is could be a retracement. And of course, the risk is always that commodity prices start to pick up again, and CPI also will show much later. And let's take a look at the CPI numbers. Since inflation hit the low of 2.4% in September numbers, it has been climbing, reaching 2.6 in October and 2.7 in November. And this has raised concern that inflation may be stalling above Fed's target at 2%, prompting several US officials to express a preference for a slower pace of rate cuts. And US Fed Governor Michelle Bowman emphasized that inflation remains uncomfortable above the Fed's goal. Why does inflation remain a challenge? And I believe that the real culprit is quantitative easing. And it was first introduced by Japan in 2001 and later adopted by US after the 2008 financial crisis. And it was so successful that it was widely being adopted by various nations. While QE has its benefit, it also dilutes currency's value, contributing to inflation that we're seeing here today, the persistency of inflation. And the delay effect of QE often causes inflation to exceed comfort level well after the policies are implemented many years later. And remember, the first time the Japanese introduced QE, that was in 2001. And that's now more than 20 years later. Now, despite inflation easing from its peak of 9%, it remained persistent above the Fed's target at 2%, a situation unprecedented in modern financial history. Added to this are the geopolitical tensions that we all knew, which could further drive up the commodity prices or the CPI. Aligned with this chart that we're seeing here, could it be there's a risk of retracement is done, and could we be, or the market is on the way up? And knowing this potential trend, what I do is that I constantly look out for the next market movers and shakers in the commodity market. Like I constantly look out for the different commodity market and who is next to do its pick up. And we saw gold has moved up. We saw the cattle have moved up. So who is next? And I've identified a trend, which is the next one, I believe, is the corn market. And what we're seeing here is that I usually will start looking at the monthly chart. And many of you know that I invest for the long term and also enjoy trading the market as well. And how I position myself to trade the market is that first I always look at the long-term chart, which is monthly. The whole intention is that I have to identify where is the main trend. If the main trend is on the uptrend, generally if I'm a mid to short-term trading, I will look out for buying on dips opportunity as much as I could. Now we could see that I would always like to use this, my favorite trend line, which is called the primary and uptrend line. And we could see that how beautifully it reacted to this secondary uptrend line. And we could see that about few months ago, it have reacted very nicely, and this was in the month of August, with a reaction of a hammer, reacting very nicely. So which I believe that uptrend could be in the making, and we could see that that was the CPI reaching a 9%. Now this could be a retracement. I believe the 2022 high inflation was the first wave, and this retracement we're seeing here is the second wave. And there's a risk of the third wave we may be seeing. Supply and demand could be the trigger, but I believe the real fundamental issue is the dilution of currencies caused by years of QE since 2001. We cannot perfectly time the market, but it is possible to get the market timing right. The market are always telling us on their next move. Stay tuned for my coming tutorial. Remember to subscribe to my channel. Join us in our weekly case study and discussion. Click on my profile icon or description below to find out more. Feel free to leave any comments below. I love to exchange ideas with you on what is about to come. Really happy that I stayed through this tutorial. You have many great trading weeks ahead.